Imagine a world where the White House could dictate monetary policy at will, turning the printing press on and off like a light switch. History shows us what happens in countries where central banks are puppets of politicians. Spoiler alert, it doesn't end well, and the United States would be no exception. Now stick with me, because today we're diving into the most important and often least understood issue in finance and politics, the independence of the Federal Reserve. Because it's not just about interest rates or inflation, it's about whether your mortgage stays affordable, whether your retirement savings retain their value, and whether the United States dollar continues to be trusted around the world. Let's get into it. So firstly, let's talk about the Federal Reserve. Originally created in 1913 after a series of banking panics nearly destroyed the US economy, the goal was simple: create a central bank strong enough to stabilize financial markets, but independent enough to resist political pressures. Now, the idea was that monetary policy, the decisions about interest rates, inflation control, and money supply should not be swayed by election cycles and political agendas. Because when presidents and politicians control monetary policy, short-term gain almost always comes at the cost of long-term pain. You need votes before an election, lower interest rates, print money, flood the economy with cash. But what happens after the election? Inflation, debt, and economic instability. Just look at Venezuela, Argentina, and Zimbabwe. Political leaders use central banks to fund government spending and cover budget deficits. The result? Hyperinflation that destroyed savings, wiped out the middle class, and turned currencies into confetti. And here's the central truth. The Federal Reserve's independence is the thin line between economic stability and political chaos. When the Fed raises interest rates, it's not to hurt the president's approval ratings, it's to cool inflation. And when it lowers rates, it's not to hand out political favors, it's to prevent recessions. Because the Fed's job isn't to win elections, it's to keep the US economy running. And if we lose that independence, if the Fed becomes just another political tool, then every dollar in your wallet, every retirement account, and every pension fund is at risk. But here's where it gets truly urgent. The pressure campaign against the Federal Reserve is happening in real time. Back in his first presidency, Donald Trump repeatedly and very publicly pressured Jerome Powell to cut rates. Trump even called the Fed crazy, accusing Powell of acting like an enemy of the US. He demanded rate cuts to keep the stock market soaring ahead of the 2020 election. And he even floated the idea of firing Powell several times. Now, fast forward to 2025, and the pattern continues, only louder. In his second term, President Trump has once again escalated his attacks on Jerome Powell. He blasted Powell on social media, accusing him of hurting the housing market and demanding sharp interest rate cuts ahead of the crucial Jackson Hole Symposium. And behind the scenes, the Trump administration has even compiled a list of potential Powell replacements before his term ends in 2026, using the threat of early dismissal as leverage. Investigations into the Fed building renovations are rumored to be a pressure tactic, raising the possibility of a for-cause removal. And now, with the world's central bankers converging in Jackson Hole, all eyes are on Powell. Can he hold the line? Can the Federal Reserve maintain its independence amid this multi-front political storm? Because if the line breaks and independence is lost, the global financial system will no longer see the US dollar as the world's most trusted currency. And that's the ultimate domino effect. And for retirees, those nearing retirement, interest rate policy isn't just an abstract debate. It determines the value of your 401k, the bond yields on your portfolios, the purchasing power of your Social Security checks, and if rates are manipulated for politics, your retirement becomes collateral damage. For homeowners, politically driven money printing could send mortgage rates skyrocketing. For renters, inflation means a higher cost and fewer protections. Independence ensures that the decisions are made by economists, not campaign managers. Because stable monetary policy means stable business investment, and when companies can trust the rules of the game, they hire, they expand, and they grow. But when the rules change in every election, businesses pull back and workers pay the price. So, to put it simply, the Federal Reserve is a guardrail protecting your money from politics. And without that independence, inflation could spiral, interest rates could be manipulated, and the US dollar would lose its place as the world's reserve currency. And and once that trust is gone, rebuilding is nearly impossible. So the next time you hear Trump or any president complain about the Fed's decision, just remember this: independence might not always be popular, but it's essential, because this isn't just about economics, it's about the stability of your retirement, your savings, and the financial system we all depend on. Thanks for watching, and I'll see you on the next one.